where most technical trading systems tell you what could happen at specific support and resistance levels, the candlestick signals tell you exactly what's happened. Notice the Morningstar signal in the Dow right on the 50-day, or I'm sorry, the 200-day moving average. Notice the Morningstar signal right on the 200-day moving average. Notice the bullish engulfing signal right on the 200-day moving average. When there's buying at those points, we can see as candlestick investors what's happening and what the decisions are of investors right at those levels. Additionally, the sage advice coming from the Japanese rice traders is let the market tell you what the market is doing. Notice when it hit the 200, it bounced back up into the trading range. Hit the 200, back up into the trading range. Hit the 200, more than likely we're going to come back up into the trading range. This allows investors to make high probability, high profit trade decisions based upon what human nature does in the past. Identifying where the bulls are taking control. For example, we've been recommending ITMN ever since it bottomed out here at the 50. We recommended it on this big price move. Not knowing why it was going up, all we could see is that there was strong bullish sentiment, and a big move like this has a result, usually a 45 degree. And notice how this did not trade back below the T-line. Do we always get big moves like this on a buyout? Definitely not. But candlestick analysis puts us in situations where the probabilities of being in the right place at the right time is extremely high. Why was it time to buy Tim Horton? Well, notice the little hammer signal, gap up, breakout. And then notice the little scoop pattern ending with the Morningstar signal. We had no idea why this was happening. It was just telling us that this was what's going on in investor sentiment. That do we always get a big price move like this? No, but the probabilities of moving up from a scoop pattern after a Morningstar signal in an uptrend is usually pretty high. It could have been like this, or it could be one day pop. Investor sentiment keeps reoccurring in the same patterns throughout history. Notice the big fry pan bottom. We call this our classic pattern. A fry pan bottom breakout. What's that going to create? A strong price move. What do we usually see in a strong price move? A J-hook pattern setup. This put us right back into position after taking some profits of getting right back into this position, expecting the next move to the upside. A classic chart pattern occurs because it's the reoccurring investor sentiment of this type of setup, which means chart patterns like Tesla that's been in an uptrend, also a fry pan bottom breakout with a perfect J-hook pattern. And now how did the J-hook pattern start? With a little bullish signal, gap up through the T-line. Will this go up? The probabilities say yes, that if this is wave 1, wave 3 is in progress. Does it occur every time? Definitely not. But the percentages or the probabilities of being in the right trade at the right time based upon the patterns that's what we're looking at today, is situations that put us into high probability situations. That'll be it. We'll see you in the chat rooms.